Hello and welcome to the first trade recap of Phoenix FX. So let's get into it. How do I take this away? F2. Okay. So last week the whole economy crashed, of course, of Japan, and the yen just completely tanked, causing everyone else to kind of panic sell, and the whole market kind of just crashed a bit last week. So we took quite a few trades between Monday and Friday, but we only took two trades with big amounts of leverage because I have a trading plan that I only started to use on when no Thursday was the first day that it came into play. So there was only two trades I took from this plan. So it was on Thursday and Friday, and it was at around. Let me just try to remember where it was. Yeah, this is exactly where it was. So the last trade I took was on Friday. This was my setup. Let's get into it. So we had our order block right over here, like this. And then we had our liquidity was resting above this high. Well, let's just check on the 15-minute to make sure that everything is right. I don't quite remember. Oh no, this was our point of liquidity that we were targeting for the day. And this is what happened at market open, 8:30. I'm on the New York time right now. So we had a liquidity sweep to the downside. We were expecting price to create an order block, so there were many order blocks being created, and we were just waiting for it to retrace back into our main order block. I can't tell you guys exactly why I chose this one. That's only released on the paid mentorship, but it's to do with some advanced price zones. But let's get into it. Price tapped into our order block, and my strategy, as soon as it hits the order block, we're entering. So we entered right over here, stops just above. Well, I mean, you could either do just above the order block or just below the swing lows. So mine was below the swing lows, and I was just targeting the 15-minute liquidity. So it was this zone right here. So now, some more stuff about this trade. It was one of the quickest trades that I've been in quite a while. I mean, you guys can see this price action. It just literally no drawdown, unless you're counting the start bit, which was like pretty much nothing. So our risk reward ratio for this trade was 1:5. I sometimes put it just above the order block, the body of the order block actually. So like this. This is what I like to do, just to ensure that it's quite a good risk adverse trade. So you'll see this is what I did on Thursday. I didn't do this on Friday because I wasn't 100% sure that price was going to respect this order block, but it did. So we could have had a 1:15 risk reward ratio trade. Pretty smooth. I mean, if you guys know how the markets move, this is algo 1. I'm not going to go more into it. That's just all I can release to the free YouTube channel right now. So then our trade on Thursday was something like this. Let's just mark out our liquidity points so you guys can see. So my trading strategy is pretty simple. There's just a lot of analysis that I'm not going to share with you guys, because obviously that's only for the paid mentorship. But to the naked eye it looks pretty simple, but the thing is that a lot of people struggle with is they struggle seeing which stuff are valid. And I did too. I also didn't understand like what's a valid order block, because there's so many that form on the daily, especially on the 1 minute time frame, which is what we're at right now. But when you start understanding the charts, then you can take trades based off specific areas, I'll say. So this was the trade I took. It was somewhere around, where's our double fair value gap? Yeah, it's right over here. Okay, so this was our order block. This was like a 1:25 risk reward ratio, which is obviously insane. So it's also a buy. We also targeted this liquidity. Stops. This stop was just above the order block. I mean, just below the order block, sorry. So it's like this. And once again, this was a algo 2 trade. I'm not going to go into that part of the trade because that's obviously the main part. But anyways. So basic, here's our order block. Price tapped into our order block. We entered targeting 15 minutes resting liquidity. It's a little bit higher. It was something like this. But it was roughly a 1:25 risk reward ratio trade. Pretty bang if you ask me. I mean, Thursday and Friday were good. I've been just trying out some other strategies as well. I think I took like 6 or 7 losses and 3 wins with those other strategies. So I think for next week, I'm just going to stick to this. Let's actually go over one of the trades that I took that didn't work out. It was on gold. Wait, no, it was on Nasdaq. It's on Nasdaq. Sorry. So this was a more long time frame trade. So on the 1 hour, you could see that this this created a massive imbalance, fair value gap right over here. So my bias was bearish because I thought price would want to tap into this fair value gap and then just shoot up, because the whole economy crash thing, it did affect the markets a bit, but it's not like, I don't think it's going to have an effect on the markets next week. I think price will recover from that Monday crash. So this was the trade I took. It was on the 5 minutes. As you can see, price is chopping and it's ranging market basically. I shouldn't have taken a trade. I just took a trade because I was being impulsive. So not something that I'll do again next week. So we had our liquidity over here. We had this liquidity sweep, and I didn't realize that I didn't see this liquidity sweep initially. I was only trading from market open, which was 8:30. So I took a trade from this. We had an uptrend over here, this 1 minute uptrend. We had a breaker structure, and price then left a order block over here. I entered a sell off this order block, and my stops were just above the order block. So this was a different strategy to the last trades that I took. Probably just showing me that I should just stick to one specific thing. And I was targeting this area right here because I thought price would return to this 1 hour fair value gap and then shoot up. So I was initially in profits. I didn't take partials. I was pretty much big balling it for the full profit. I didn't want to take a small amount of profit. And then it was looking good. I even entered more positions from this fair value gap. And I saw this fair value gap being created, and price then tapped into it and created a massive rejection candle, I entered more sells. So I had around 2 positions open. For the other trade, my stops were above the fair value gap. So I entered after this. I entered at like around about there. Stops was like just above the fair value gap. And I mean, that's, and I was targeting this zone as well. And I mean, I've never been stopped out of a trade in like 3 weeks, but you know, it's a first for everything. So last week I took a couple trades. You obviously saw the first 2 trades that I took on Thursday and Friday with that one strategy. That's probably something. It's something that I found about 2 months ago, and it's been working crazy good for me. And I can't go into it on the free YouTube channel, but on my VIP mentorship, I share with all my students. I share that strategy with me, and I'll put some comments from them that they've sent to me about how it's changed, like their whole trading mindset kind of. I'll share some of that with you guys, just so you guys can see that I'm obviously legit. And then maybe next week I'll show my live account if you guys are interested in that. So drop a comment if you guys want to see my live account trades, just so I can show to you that I'm legit. But anyways, peace out. See you guys next week.